Alright, so I'm going to buy this as a soup. So we've had another form of sell side taken right there. And I'll put the stop loss right at the low minus 1 tick. There. So we have seen the Judas swing this morning. Since the 9:30 opening, the market has done what? It went down. Little shift in market structure. Came back up into a inversion fair value gap. That's this right here. Right there. Market broke lower. Volume imbalance, traded back up into it. Broke this low and then reached for the sell side. So all of this right here, all of this that is Judas swing. So it's going to take market up into this area here. All of this was leading traders into wanting to get short. Okay. So we had 2 stages of sell side taken. This low and this low. So we traded down into it here. And this volume imbalance, we saw that hit that initially right before it dropped down. There's a volume imbalance there. We have a fair value gap here. I'd like to use this one as a inversion fair value gap. So if we can get to this and it can get above it, I'll look for it to act as some measure of support. So let's get the right color on because you guys are being trained to see inversion fair value gaps in this color. Okay. There's a small little gap in here and there's a volume imbalance right there. Admittedly, I like to see this stay open, act as a breakaway gap. Hey, don't hear Miss Piper. Spoil rotten. So today is a holiday, and for the life of me, I don't recall. I don't have my cell phone here next to me. I'm recording in my morning room, so you're going to hear all the ambiance of my wife walking through the house and taking the puppies out, and she might be moving things around in the kitchen. So that's that, but I don't have my phone that I could pull up and see what I know it's a holiday today, but I just don't recall which holiday it is. So let me put the annotations on here real quick. I wanted to see this remain open. Right there. Okay, so it's that. Okay. And there's a volume imbalance here. We'll make that this color. Okay. And I'm not going to annotate that because you guys know what I'm talking about in regards to volume balance. And I'm not going to annotate that because you guys know what I'm talking about in regards to volume balance. So already we have what would very easily and satisfactorily appease the individuals that would look for like a bread and butter type setup. Getting long down here, I want to run below that low, not even getting the best of fills, and returning right back to a point of interest that I annotated, set up. That's an inversion fair value gap. Someone that would be taking this trade that maybe doesn't have the conviction, or maybe I'm wrong this morning. Maybe I'm going to get it wrong. And it went up into this area here. While learning to hold on to trades, this would be where you would take your partial or collapse the trade and then watch the rest of the morning to see if it pans out. Now I'm going to buy that there because it's the volume imbalance and it's the order block here. So without cluttering up the chart, I don't want to put too much on here because it's already starting to tick me off because I can't see price as much as I would if it was this completely naked. So we're working off of two things here. We have an order block, propulsion block, and volume imbalances. They can be overlapped, and that's actually drawn wrong. There you go. I held down the button too long. So I'm not too concerned about what it's doing down here. What I'm looking at is, do we have an interest to get into this minor buy side liquidity? And this one. Now this one right here that I'm annotating, this one should send it quickly into this. But it can move, gradually to get to that one. But once we get above this one, it should be an acceleration in price to move higher. Okay, and just annotating that we can see when price reaches there. I should talk in a more uncertain manner because it sounds like I know for certain. I don't, because it's a holiday and you pull all kinds of shenanigans on holidays. Crunch this up a little bit. Now I'm going to annotate this. Usually I keep it over on the left hand side, but I'm going to make it center, that way it stands out here, and I can spread this over a little bit more because I want to have the candlesticks be a little bit more beefier. That's Miss Bailey, in case you hear her. She sees deer. If she sees deer, she's yelling at them like, you're not supposed to be here. All right, so we have another order block here. Bottom right. And let's see there. So we have a volume imbalance. We're trading through back into the order block here. I'm going to add 5 more there. I'll let you see the price. I'm going to fix that stop in a second. Give me a moment. So there's my fills, okay? So I need to see everything. And I'll leave them up there for now. Let me go ahead and adjust the stop loss to the rejection block of that swing low. It's the down close, so my stop is there. And I have the protection of this volume imbalance. I'm sorry, not volume imbalance. This gap, which is what I'm referring to as a breakaway gap. You can see it didn't fill it. I have the order block, mean threshold, and we have the propulsion block, and I have a volume imbalance, and I have another order block, which is a propulsion block off of this one, and we have a volume imbalance, and now we have this inversion fair value gap. So I have lots of things sheltering my stop loss down here. We have a small little volume imbalance there as well. So you have to be very, very patient with days like this when it's a holiday. Do this. Really just giving them what for, huh? Now notice the volume imbalance right here and the consequent encroachment of that wick. So what I'm looking at is, yes, we can come down and touch the bottom of that inversion fair value gap, but I want the body kind of like close at or above. So we'll have to see how it performs in here. Completely permissible. It's a mohawk. Remember, I have all these PD arrays. Before my stop gets touched, I have all these PD arrays. I'm going to take the price annotations off because I'm going to see price better than it is when it's on. Back down into the volume imbalance here. Now I'm going to add 5 more there because I'll show you the price real fast. See it? That's my fill. Scaling it more. I would have preferred getting actually filled below that low. That does a little bit irritate me. You can see it's just above that level there. Those are the types of things that irk me. Now I'll add 5 more while we're in that volume imbalance. And now I'm at my full position. So we should get a run now. I don't need it to come back and touch this order block. I just don't want to see it act as inversion. So I want to see it go through it, back up inside this upper half of the inversion fair value gap, which I haven't annotated. I apologize. Inversion fair value gap. And that's the business. Now, there's 2 schools of thought here. You can look at how I pyramid positions like this, and you may question, like, okay, well, what's the point of all this? Well, number 1, it's proving prowess and understanding. 2, it's teaching you how to scale in a position. And if you're a funded account challenge trader type person, you don't put your big block of orders in down here and hope it works. You can go in with 1 contract, add another contract, add another contract, another contract, another contract, instead of having 5 on or 25 in this case, if it was permitting you that much leverage all at one time, and then you don't have that much wiggle room. You have very little forgiveness in terms of drawdown intra-trade. Intra-trade is when you put the straight trade on, from the time you put it on and when it closes, what was the maximum drawdown, both in time and in money. So you want to be able to guard that exposure both physically and monetarily and psychologically, because it's going to be a wearing down of you mentally if you have drawdown that's pretty big. And that's the problem you see when people have these funded accounts. And my son fell victim to this, putting these big positions on because 15 contracts was allowed to be used in a funded account challenge. You want to get through it real fast because you doubt that you have the skill set to keep going. So you want to be able to build in these positions a little bit slower. That's one school of thought and why I do it and teach it this way. Also, it teaches you any one of these could be a trade entry if you missed the ideal one down here. And even I missed the ideal entry, which would have been entering below that low. Okay, so it's teaching forgiveness in terms of precision. Or you could just say, okay, I don't want to be monkeying around any of this. I want to just take my one entry and then manage it throughout the trade with no additional pyramiding or entries required. And where would my stop be in response to all of these things being in the chart as it is? So it kind of makes it more comprehensive way of learning how to engage price and manage a trade or manage a trade idea. And it kind of like answers a lot of questions by me teaching it like this. So we're back at that old low it swept. Let me scrub over here a little bit and see. There's that old low. So the algorithm is repriced back down into it again. Retail wants to see it continue moving lower, and denial should come in now. Start moving price for buy side because it hasn't really taken any measure of buy side yet. And a thin morning like it is today on a holiday, they've already done 2 stages of sell side and a shift in market structure. So there's liquidity building here, and there's definitely liquidity here and here. It does not need to get up to this level here for me to profit. So this would be like the best case scenario, trading to there. But we'll take off, take 5 off. See how these bodies are all basically real close to one another? Seeing that makes me interested in taking a partial just above that because they could just wick into that and not even go any higher. And we'll use this area here, and I'll put one right here. And then the rest will just be taken off by either the stop loss or reaching up into the buy side that has been the initial framework for the trade. Well, why don't you just hold for the full move? Well, because it's a holiday, and I don't know if it's going to have any reason to go up to that level today. There may not be enough orders coming in, and they may not be able to inspire enough order flow to come in to warrant that repricing up there. They may need to do it tonight or going into tomorrow's trading. If at all, really. I could be wrong. I would want to see large candles here on the upside. That's my dishwasher saying, let me know that it's done. Okay, we came back down into that gap. I would have preferred, obviously, as I mentioned here, that it stayed unfilled, but it came down and traded into it. So let me just bring this over here so you can see it. I just want to add one more in here just for the general principle. So it would definitely need to, if it gets above this little high here, it starts to accelerate. I would like to move my stop loss then up to just below that low, but it needs to get above this high first. One more time, repricing to that fair value gap. The work is already done down here with this low. Because it's a holiday volume day, I'm concerned that my stop loss might get hit and then still spike higher. But I'm going to keep it right where it is. If it punishes me, then so be it. They're going to come all the way back down for that one imbalance right there. No. Just for peace of mind, I'm going to move my stop right below that low by one tick. Because if they want to come after that volume imbalance like they just did, the spread could become a factor and tag me. So that's this right here. Yeah, I feel a bit better about that. See how that would have stopped me out. But rookie sensation ICT pulls a hat trick. This is probably going to be impressive to you. I, on the other hand, don't like the fact that I had to adjust my stop loss. I like to execute without having to do those types of things. Now retail sees this old low back here as resistance. I don't. I see this gap being accumulated with. This swept through it, but now we'll start to see it run right back up into this inversion fair value gap and a lot more acceleration because it's an abbreviated trading day. So the algorithm will be running a little bit more punchier, shorter in scope in terms of time. So now the trap is set. Traders are caught short. I'm exceedingly bullish now where we're at based on the time. I'd like to get that stop loss paired a little bit. Now I would expect the retail traders that are selling short with that old low, treating it like it's support turn resistance. I want to see acceleration in large candles here to really disrupt their sentiment and reward those individuals that are contrary into it, like me. So large range up close or green candles would be confidence building for the contrarian nature of the trade, because all of this, as I mentioned earlier, this is running the sell side here and here. So it's two stages. So in a lot of ways, this is a Judas swing that gets people thinking, what, it's going to keep going lower. Then we have a shift in market structure and then a failed swing to get below that low because the morning low is in. Now I want to see it gravitate towards this little area here. So it's a small little minor buy side. Liquidity pool right there. Okay. And above that, then we'll start worrying about how, if at all, these two levels for the volume imbalance there are factored. Trading into a volume imbalance there. We have an order block also, so it can paint through that wick down and touch this candle here. That'd be an order block, bullish order block rather. So right away you can see how much more complicated it becomes when you're trading on a holiday. Which is why I tell you don't trade on a holiday. Just because it has time available for you to trade and the markets are moving on these days doesn't invite confidence, because the moves are generally not sustained, they're not clean, and they can be erratic. So notice this instance right there where it's support again. So retail traders that use that level at the 46.50 level, this one here, those that are using it as a support area to buy, they'll be rewarded. Folks that have used it as support broken term resistance, they're going to get punished here. Bull flag, real one, forming in here, which would conveniently take us just above there. You can see the flagpole, flag building, and then it'll take us up to here. I'd like to see it work this volume imbalance as support, then springboard us up into here, accelerate into this, and above here, then it should reach quickly for that liquidity up here, if it's going to go there at all today. It doesn't have to go there. Like, this is a best case scenario. I have limit orders to get out at, the respective levels of liquidity here, as noted. I'm going to keep this here, and I'll just let the rest of the movement pan out. Oh, bones cracking. Oh, it's not professional for you to be yawning and all that business in a recording. Whatever. I'll make the rules. Just for the sake of I told you so, I'm adding one there. Okay, because I outlined it as a bull flag that will work. And I'll add the labels where the fill was, as you can see. See him? Can't do that with market replay. I'm just going to take the price fills off so that way we can follow along the price, not be irritated like I am when I look at it like that. Volume imbalance. See it here between these two candles and here. Trade down to here. Now we should start seeing a really nice run up into the inversion fair value gap here. And lower should not be expected at this point. We should start seeing it discover new buy side, which is here, here, and here, and here. Okay. shuffling cards, that's one card short. If you were here, you'd probably say, how do you know? And I would tell you, I can feel it. It's definitely one card short. Imagine that. Could you do that? I'm not impressed by that, ICT. Talk about the market. Volume and balance. This is what I mean. Like, it can be really fickle. You can do a lot of things to upset you and behave in a manner that doesn't bode well, or bode well rather, for your confidence. It's too thin when it's on a holiday, and you can't expect the same degree of precision and velocity for the movement that you would get on a normal day versus a trading day like this where it's abbreviated. A lot of people have started, they took a long weekend after the morning session on Friday. That was it. They packed it in. And they sit through on the sidelines on a day like this and allow the market to do whatever it's going to do, and it doesn't matter to them. Okay, I want to see it reach to the top of that inversion fair value gap and through it. It can come back down after touching the top of it. It can come to the top of it and then come back down and wick through, but do not close at or below the low of the inversion fair value gap once it touches the high. So that's, in my mind, what I'm anticipating in price delivery. So my algorithm should behave that way. If it doesn't, then I'm going to move my stop loss up just below these lows. But it stays where it's at for right now. It's kind of heavy-handed in terms of the money, but it's not heavy-handed in terms of the percentage of risk for equity. Move this over, give a little more room. I'm going to take off 6 when it touches the top of that because I'm going to go back down to my original trade size that I had in mind for this. Trading into buy side balance, so sign efficiency. I didn't want to see this pink into any of this, but this would also be a institutional order flow entry drill. I'm at the maximum. I'm going to add to this position, so I'm going to leave it there. We're at an order block, so this is reclaimed with a buy side balance, sell side efficiency here. It can spike down. I'd rather it didn't, but it can spike down into these two down closed candles. I prefer it not to do so. So I'm already counting down the levels of what would be failures, because the first parameter I put on my trade in management was if it touched the top of this, I didn't want to see it close at or below. It did that. So that's one. Now we're in the order block. The bodies are respecting that. So it kind of like cancels out that one bad thing. And I didn't want to see it trade into this fair value gap here. So it did that. But so far it's given me some conviction. Okay, like I said, I want to sell the 6 there. And I'm going to move my stop loss up to there. You can see. Holidays. Very, very, very hard to navigate in comparison to any other market day. I mean, it's not impossible, obviously, but it's by a degree of comparison versus a normal trading day. Like, there's a lot more thought and decision making that needs to be introduced to a market day like this versus simple every run-of-the-mill day. When have you ever seen me adjust a stop loss? Right? It had to be done today, though, because they were coming for it right there. Yeah, you gotta get up real early in the morning to get ICT. So I want to see it accelerate and get that buy side right where these bodies are, because it could go there and fail and not even go above these. So I'm using this as a litmus test. Does it go here and then take out that high? Then it should be a real easy run to get here. And then it should, if it gets to this level here, it should accelerate real quick to get there, if it's going to be there at all. So that's my internal dialogue, and that's what a charter member gets. You don't get that from YouTube, and you don't get that from Twitter, and you don't get anything really from Twitter. Just a congratulations to another trader. Here's that volume imbalance here. Okay. See how it went down, consequent encroachment right there? And what's it reaching for? My next partial. I'll leave them on now. Kicking my bottle of water around. I should have had an Evian. Deer Park tastes like bath water. Ugh. How do you know bath water tastes like ICT? Because I take baths, and sometimes I'll shave in the bath and I'll rinse my face off by cupping the water and putting it up on my face and rinse it off. And sometimes the water gets in my mouth, and that's what it tastes like sometimes. I prefer Evian and Fiji, but we have the Evian and Fiji downstairs, and our upstairs pantry only had the Deer Park, so I grabbed that before I got on here, started jawboning. Should spread up here and grab that 963 1/4 level. Offer me another partial. It's being real reluctant, isn't it? These are the types of days I wish I would have saw, like Larry Williams or anyone else I had put my interest in as I was coming up trying to learn. Trading in days that's difficult. How do you manage that? How do you, number one, how do you execute? How do you manage your emotions? How do you anticipate, what's reasonable, what's not reasonable? So we have a mitigation block here and an inversion fair value gap. And then we have the order block here. And we have this fair value gap. So I can move my stop loss up to cover cost and remove risk now. Okay. So now I'm in a sweet spot where I don't have to worry about doing anything now. It either takes me out. I've paid myself. I've moved to cover costs in the event that I do get stopped out. If it does go down there, then it's probably going to be a consolidation the rest of the day, and I'm not going to be most likely correct in trying to trade it again. So it's easy for me to just let it go now. It either gives me my partial or partials in target, or stops me out, and I'm okay. I'm net positive on the day regardless. But my point in saying all that is, this is the type of lesson. These are the lessons that paid mentorship students, they paid for this type of stuff, this ongoing education, not those videos that are being put up on YouTube. And every time I see someone complain about it, I just get this feeling that that's the person that's been selling my stuff. And if it's you, I'm glad that you're mad at me. I'm thankful that you shared your displeasure in me, because that means I got you. See, channel where I pointed to the 16,980 and 3/4 levels as a buy side, I pointed that to your attention there. And then you're watching this, and you probably watched all of this business in here and was thinking, wow, you got it wrong. And it's these insights that I'm sharing that you're not entitled to, even as a charter member. Like, I really want you to know that you're not entitled to this. You're at a point where you have had access to that content. You went through it with me every year for the members that were here, and you watched me use it, and you watched me call the market with it. You watched me be very accurate with the understanding where I thought the market was going to go, how it should behave and perform. And your job is to use that information. I could have stopped then and never had charter membership. Okay, you paid for the streaming access. You paid for the ability to, there's my other partial, by the way. You paid for me to share it real time, using it, and teach it. That was mentorship. It was the experience of being there while it was being streamed to you live. Those videos, while they do have value, but without me pointing out things like this right here. This is an education that the public doesn't get on YouTube. Now, as soon as I see someone share it, this video also will go up on YouTube. See, I'm gonna make money off of it if you leak it. I'm not making money off of it right now outside of the trade. So think about it. The only control you have is how much longer I do what I'm doing here. Like, I get to sit here and answer questions, and that's all I do, and never amplify anything. If you want me to do that, keep belly aching. Keep belly aching. Because all it takes is a few of you to do that, and I'll just say, fuck off. And I'll do whatever I want to do. See, when you signed up with the understanding that this can stop at any time without any prior notice. I could stop at any time. I have that right. And because I am the property owner of this intellectual property, I can give it away to whoever I want to give it away to. You don't own that. Purchasing streaming access like Netflix, you don't have ownership rights of those movies. You can't say someone else can't get their free access for a month with a coupon code, or they can't get access to a book that an author wrote that you bought. Now they added it to Kindle Unlimited. That's entitlement. That's entitlement. And I can't tolerate that. If you can't see the value of being here, like, I don't need to be here with any of you. I enjoy it, but I do not enjoy being around entitlement little fucks. that send me emails because they can't see the value of ongoing education. The fact that I'm even willing to sit here and have any engagement with you at all without having any more money coming into my pocket tells you my character. I want to help you. I want to be amongst you. But for some of you that are just really short-minded and ignorant, see, you think I'm ignorant because I put those videos up there. I'm proving that the real value is where you're at right here as a charter member. It's not those videos. You didn't believe me when I told you before you joined up. I said those videos are not the mentorship. It's the ongoing me pointing out everything. We have a volume imbalance here and the order block there. So I'm watching how it behaves there. So you see how we behaved. This was my concern when I was telling you earlier that what just happened here? Hold on now. It's got to be put down and left. Okay. Let me annotate it real quick. But it was those bodies I was telling you about that had my concern. See how these bodies are here? Okay. And because it's like that and it's real close proximity to the bodies there, I was treating that as the relative equal highs. And that's why I had my limit order right there. So that way it could stab into these wicks and it could treat the consequent encouragement or fail. So look at the high of that candle. You're going to be looking right up here. The high of that candle comes in at 966 and a quarter. Whoops, I'm sorry. Yeah, 966 and a quarter. The highest high over here was 966 even, so it didn't even get to that quarter point. So you can see that I taught this to you here and the logic as to why I was treating it that way. It could still very well easily go up and take that high out and run here and go there. It doesn't change the fact or diminish the importance of what I was teaching you here. Whenever you see the bodies in real close proximity like that, and the first high has a higher run on the wicks, don't treat that high as your buy side liquidity pool. If you're going to use it as a partial, treat the bodies. Okay, use the higher of the highs of the bodies. See how the body is here is the highest one, and then this body here is the highest of all these. So that's where my limit order was resting. You see that we went above that with the bodies here, but we have yet to trade above it in the wick. So we haven't even pierced this old high yet. Why is that important? Because it's a holiday and it could fail right here. And then there's nothing else given to me as a potential profit. And then it would start eroding the open profit that's in the trade. So it's these types of lessons that are being made available to you, but you'll discount it because you saw me give away something. Like that's like two children, okay? And if I give a gift to one child and another kind of gift to my other child, they fight. Oh, well, you gave that gift and I like that gift better. When you would have been just fine if you never would have paid attention what the other one's getting. So you're not minding your own business. You're minding your brother's business. I paid for those videos. No, you didn't. You paid to be here. That's what you paid for. Read the terms again. And this is where it can be very frustrating. And admittedly, these are moments where I demand that price behaves a certain way or I lose interest. And because I have 20 contracts on right now, if it were to trade back down into the volume imbalance here, I would take half off or 10 contracts. Why? Because it's more likely that it's not likely to get up to this level here today. And I wouldn't want to see it accelerate to and through this high and then into this high here, where my next partial is waiting. It might not get there. It might just recede back into the range down in here. And I don't want to see that. So I just want to prepare 10 contracts to be able to come off if I need them to come off. I'll just set that right there in case I need to touch on it. But some of you just aren't equipped. You worry about the littlest things. You make mountains out of molehills, and you probably lose sleep over it. Oh, he just put that video up there. I watched that video just a month ago, and I learned something really good, and now he just gave it away. If I would have known he was going to give it away, I never would have bought it. Well, here's the thing. If I would have known that there would be this much belly aching, I never would have invited you all to be to this part of the community. I just would have did the 1 year and stopped. Once you paid and the year ended, that would be it. And then you'd be complaining that you wish you would have had ongoing learning. So you're just illustrating the fact that you're going to be a person that's going to be impossible to satisfy. You can't see value in anything. I would never open myself up to another mentorship intake. The level of entitlement today, I wish I would have never taken in the 2021 group. I wish I would have never done it. I wish I would have just simply uploaded the videos immediately, put them right up there, and that would have been the end of it. The most thievery, the most leakers, the most complaining bunch of membership students I have, and I'm not saying it's a lot, okay, but maybe a dirty dozen. Okay, that's about it. But they're such chronic complainers. And I guarantee you they haven't even studied the material because they came in here wanting to see signals given to them. And you're upset and belly aching that I'm not doing reviews anymore. Why? So you can sell them? Other people can share them and sell them? No, I'm not doing it. But when it's pertinent, when it's useful, and when it's needed, I will give amplifications, and especially like a trading day like today, it's a holiday. It makes it very hard. It's not easy. It's not easy to hold these positions like this because I know that intervention can come in and just upset the underlying narrative I'm operating under. And also add to it that there are so many things. We got aliens stomping around in the malls. Did you see that latest video where it shows like a portal opening up and you can see something stepping in and then it vanishes? It's some wild stuff. They're really trying to make you believe all kinds of stuff. We got wars, rumors of wars of, this one's going to be retaliating for this or that. Our borders are open. They're letting in sleeper cells in the U.S. All kinds of stuff's going to pop off here soon. And it's a holiday, so anything can happen. Look how long it's denied that 66 and a quarter level. Any other given day, it would have just ripped right through it and took off. And this is a characteristic of trading on a holiday, with holiday volume rather. It's very, very frustrating. It's very, what's the word I'm looking for? Challenging for someone that doesn't have the experience to know what these characteristics are. And I'm going to put a point of indifference now. I really don't care because I've had 2 partials taken off. I've moved my stop to cover costs and no potential loss. Now this candle should reach up there and swipe that 66 and a quarter level. But that still doesn't even afford me another partial. And because of that, I'm going to take off 5 here just for general principles. And I'll add that back. Nah, I'll keep it like that. I've taken 5 off now. So if it trades back down into here, I'll take off 5 if it trades down into the volume imbalance because I don't want to give up all the ground here. Okay, so I shared the real-time concerns I had about this area here and what it was doing, what it wasn't doing, and why I felt the way I did, and what I do to manage that. Okay, figure out how you could have done that in terms of teaching it in a book. There's some lessons I can't teach or at least to my satisfaction, and probably to most of the reader's satisfaction, how I could have articulated this moment here in a book, in a paragraph or two. It's not the same as me seeing it real time, thinking about it, covering the concerns I have as the trader, the time elements that are being implemented here, and how price is behaving. So you're watching the actual candlestick move around and gyrate. I can't accomplish that in a book with static charts. There's no way I can adequately describe that. So that's why I taught mentorship in videos, because you get to see the actual performance of price action. And that allows me to teach you conceptually, where I can talk about something and you say, oh, well, yeah, I know what he's saying. Then you go back to, just like an encyclopedia, you go watch those same videos and you're getting new use out of something that's old. But it was me directing you with more insights, or challenging you to think about something a specific way and referring to that resource. Again, that's mentorship. Where I was teaching that language, made it available to you, that's not you going out and using it. No one went out there and watched the videos. And as soon as they watched them, they went out there and started making money. I have no students that did that. Not one. There's my other partial there. So no students are going out there watching those videos and becoming profitable because they watch the videos. They have to have education behind them. They have to be taught. And you heard me in the commentaries that this is what I'm referring to. This is what I'm using. This is my thought process behind why I think the market's going to go here next or there next. That's mentorship. That's what you were paying to be a part of. Not here's some bland language and foundational content, so that way you can understand me when I'm talking. Imagine if you didn't understand the core content. Okay? If you didn't have that core content at all, let alone take the charter price action models away. Take them away. Okay, just take them away and just say it's just the core content. If you hadn't studied that and learned that language, everything I've described in this morning here would be completely alien to you. It's just afforded you the language barrier being removed. Now, you can't do what I just did here today, and you're charter members. You don't know the logic behind that. You don't know what I just did. You have no idea how I behaved and managed this position. Only listening to me as I articulate as it's happening, then you're learning. That's mentorship. These are the lessons that I never intended for the general public to receive. But some of you assholes in here know that there's a market with my name attached to it, and you're going to go out there and you're going to sell your little groups and videos, and you're going to tell everybody don't share, and as soon as they buy it, they're sharing it and buying it, or selling it rather. That's the way it works. Okay? So I didn't mess up anything. Your brethren did. Now, like a good father, I'm going to chastise everyone. This is the punishment. This punishment is I'm not going to be making lots of this type of content, because the only thing I do is by doing that, I give them more ways to sell and make money off.